This is Lippy the Clown talking to you about expenses and revenue. What are expenses? Well, if I buy a cell phone or I buy a car, or if I pay rent, or if I go to the movies and I have to pay out money, well, that's typically an expense. And what does revenue mean? Well, it means if I get a job at 7-Eleven and I'm paid, the money I get is revenue to me. So that's a concept that I want you to learn today, revenue and expenses. If you have more revenue than you have expenses, you typically have a profit. If you have more expenses than you have revenue, you technically are bankrupt. No. You technically just owe money to someone for the money that you don't have that you've spent. Well, let's focus today more on expenses. Expenses in terms of accounting. I want you to understand and grasp this concept forever. When you incur expense, when you increase your expense, it is always a debit. A debit. When you incur expense, it's a debit. If you reduce your expense, it's a credit. Remember, you may have learned that for every debit there should be a corresponding credit. However, when we incur an expense, it's a debit. Sometimes it means we take money out of our bank account. Sometimes it means we spend cash. But the fundamental rule is when a debit has to be journalized or expensed, it is always a debit. Conversely, let's talk about the concept of revenue. Well, when I have money coming in, it's always a credit. Do you see how the debit and the credit relates? When you have an increase in revenue this time, mind you, it's always a credit. When you have a decrease in revenue, well, it actually becomes a debit. These are fundamental rules to live by. Increase in revenue is a credit, increase in expenses is a debit, decrease in expenses is a credit, and decrease of revenues is a debit. That's a very important lesson. I hope you got it.